Welcome back to Banking on Cannabis, the podcast where we talk to the leaders who are shaping the future of the cannabis industry. I'm your host, Terry Mendez, CEO of Safe Harbor, and operators use our financial platform to bank, borrow, operate, and grow. In every episode, we highlight the operators and partners solving the real problems facing the industry that have a direct impact on whether a business succeeds or struggles. Today, we're diving into one of those issues: securing responsible, profitable sales by properly evaluating the credit risk of your customers. We will discuss today what it takes to evaluate target opportunities, make the sale, convert a sale into cash, and then further sell into your customer base. We're joined today by Brett Gelfand. Did I say that right? Gelfand?
Yeah, Gelfand.
Okay.
You're good.
Okay, we're joined today by Brett Gelfand, the managing partner of CannaBIZ Collects, the first and leading cannabis-focused collection agency, founder of Cannabis Credit Association, and a partner of Safe Harbor. Brett, welcome and thank you for joining us. Can you please tell the audience a little bit about your background? It's an incredible story.
Yeah, thanks for the intro, Terry, having me on the show. It's amazing to be back on with Safe Harbor because it goes full circle. My first job out of college, I was hired to help build a cannabis company outside of Aspen, Colorado. And I was there in 2015. We raised close to $20 million to build a state-of-the-art facility, investors throwing money at the green rush. I had no clue what I was doing being right out of college and building these projections to raise money and throw into this incredible operation we had out there. And speaking about cash and banking, it was a nightmare. I mean, I was paying 50 people myself with cash, running payroll bill by bill until we finally got approved with Safe Harbor, and I had to drive back and forth to Denver multiple times. There was a 500-page application back then. It was challenging because I know how much compliance goes into ensuring that you guys are working with the right people, and thankfully we were approved. So that was the start, and I ended up being promoted from executive assistant to CEO at a young point in my career, got thrown in the fire, and one of the main challenges that we were facing against some of these Denver, Boulder, more metro facilities was how do we ship and wholesale product across the state and increase revenue? And we decided, let's start extending net 30, net 15-day terms, let our salespeople guide those decisions. And what a terribly brilliant idea. Sales went through the roof, revenue was picking up fast, but I went from being CEO to bill collector within about 90 days because when it came time to actually go to the retailers to pick up the cash, we heard every excuse in the book. So to wrap up the whole background story, I ended up deciding I need to tackle this problem head on, started CannaBIZ Collects in 2017 as the first and leading cannabis collection agency. And then 2 years ago, we basically started the first and only credit bureau for the cannabis industry, the Cannabis Credit Association, to leverage the data, leverage our resources, and leverage the insights we have to really tackle a more proactive solution versus just reactive collections. And that's really where my focus has been the last few years.
And that leads into the very next question. You said before that cannabis doesn't have a collections problem. It has a credit problem. Walk us through what you meant by that.
So just like I experienced firsthand, I had no credit process. And when you say credit process in the industry, people might think credit card, they might think underwriting, funding, revolving capital loans. They're not thinking about, I'm dropping off product to get paid in 30 days. They're not thinking about net terms equating to being literally acting like a bank, as you guys would know more than anybody. And what I've recognized is, one, it's very hard to make credit decisions in general without good information. To the benefit of operators like myself, being one of the first ones in Colorado to do this, how would you make a credit decision without good insight and information? Number two, though, we didn't have a process at all. We just let our salespeople make decisions just like they would be on the street fronting product. And I think it's time that the industry wakes up to say, okay, we're owed all this money because of consequences of not having ourselves buttoned up. Just if a bank was going to extend terms or loans or provide capital, they would never do that on a handshake or word of mouth. And I think that's really been the difference in why I think this is a massive credit problem. But don't get me wrong, definitely collections issues that are happening in a young, maturing industry. But I think it's more important to tackle the core issue, even if it hurts my collection agency on the back end. really trying to focus on a proactive approach.
And you're hitting on something that is interesting. I've been a CEO and CFO inside and outside of the cannabis industry. When you're outside of the cannabis industry, you have real tools. You have credit analysts that have decades of experience doing credit analysis. You have a Dun and Bradstreet that you can go to and understand the profile of the customer that you're talking to. And you have a mature differentiation or segmentation between your sales group and your AR collections group. And they're usually led by different people and they report to different people. Your sales group might report to a chief revenue officer or a chief sales officer, or, right, where your AR and collections group usually reports to the CFO. So there's a natural tension there to say, am I protecting the investment that I've made in my inventory by selling it to you, right? I look at this as responsible sales, and I've consulted with many cannabis companies and now running a Safe Harbor and talking to our client base about, hey, when you're making a sale, I know it's important. I know you're trying to make payroll. I know you're trying to do all of these things. However, when that salesperson is in front of the person and saying, please give me the next $100,000 order, and by the way, pay me for the last $50,000 that you owe me, it's a really weird situation, right? So how do you expect people to navigate that situation and do it responsibly and protect their investment?
I think right there you nailed the biggest issue that the industry faces is understanding the separation between sales and accounting and finance, and understanding the processes that are involved. And I'm not ignorant to say that there are some big MSO clients and big MSO groups that have the resources and funding to have those departments. And there's a lot of mom and pop cultivators that might be watching this saying, Brett, what do you expect me to hire a credit manager for 40 accounts in a local region, right? And I think the important part is the philosophy goes first, is for business owners to understand the difference between sale and cash flow. And you mentioned it so well. You could spend all this time growing the best product, growing the best strains, the best concentrates, extractions, edibles, the whole gamut. We did it all in Colorado. But when you finally deliver that product and you don't get sold, it is detrimental in killing companies every day if they're not collecting that cash. Because not only did you not get the sale, you also spent all the costs to make it.
Yeah.
So when it comes to how to have responsible sales within your sales team, if you're going to extend terms, no matter how big or small you are, you need to have at least a document of checks and balances of what does it mean to you and your group to extend terms. Does that mean the CEO needs to sign off? Does that mean you're calling one reference? Does that mean you have a full-blown credit application? There's not a one-size-fits-all, but a lot of the work we're doing with Cannabis Credit Association and the CCA is to provide a full 360 view. So no matter if you're a mom and pop or a large MSO, at least you have data to create a process. Because before, you might be stuck saying, I don't know, I hear it every day. I'm going to sell to any customer that wants to buy my product. And when they default, I'm going to put on a COD list. That's how the industry has been run for the last 10 years. And I think that is a very reactive and irresponsible way of doing business, because the minute you extend terms, you're acting like a bank. And I think that needs to be bulleted into everyone's desk that's ever going to let their sales rep or credit manager say, you get net 15 or net 30.
Or cash on delivery, which then costs you customers, right? Because everybody wants terms. And you might not get the terms you want. I want cash on delivery, and that's great. And then you're dealing with cash, and your salesperson has 50 grand or 5 grand in their pocket, and you hope that lands in your bank account one day.
Absolutely.
Which is the challenge. Look, I look at a failed sale as a complete and total loss. And when you do that across state lines, right? Maybe I'm in an ancillary business and I'm selling you the latest MockTech machine or ozonator machine or whatever equipment might be out there. Maybe I'm a law firm, an accounting firm. There is no uniform commercial code federally that applies to the cannabis industry. So we're reliant on state systems, and that reliance keeps partner banks for us from joining into accepting cannabis deposits. And it keeps mainstream providers of equipment financing. I had a wonderful conversation with one of the top 3 equipment finance companies in the world. And they said, until that's fixed, you can't really expect us to help the industry out. So you're left with these state systems. How do you see people interacting between states when you have an ancillary business that might sell the cannabis might not sell the cannabis, but also some products are cannabis related, some products are not. What risk are they taking and how do they engage with you?
I could tell you firsthand anecdotes of I've gone through probably 8 different bank accounts over the last 7, 8 years. I ran a packaging company that purely sold packaging, no cannabis, and got money taken from PayPal and stolen from us. I had, all the major banks closed me out up until today with a collection agency and a credit bureau. You have to be careful on where the money's going and making sure that those monies don't get frozen. So I think it's an interesting dynamic where, at least for me, I see it as an opportunity that myself and my team can get really keen on each market and understand the dynamics of what's happening. So when legalization does come around the corner, we're set up to be real masters of every state and understand the players, understand the dynamics, and be ready and positioned to compete against maybe some bigger groups that might want to come when federal legalization happens. When it comes to banking and the issues that we're talking about with making the sale, this is probably one of the core issues. I wouldn't say the core issue, but along with poor credit and collection practice, this is basically fueled by the fact that a lot of these companies can't get funding like they could in standard industry. So you are now forcing the operators, either ancillary across different states or just plant touching in each state, to say, hey, let's say a dispensary doesn't have a working line of capital for $50,000 to play with. Now they're forced to ask the seller, do you mind giving us terms because we don't have enough money to pay up front for all this product, but we know we can sell it in 30 days. And that's just putting gas on the fire of everybody now, most operators, a lot of ancillary players, again, acting like capital providers because they don't have that access like they might have in a traditional banking setting. And those banks are probably going to do, or will do, a lot more diligence to then vet those customers to give them the financing and ensure that risk is protected, which just absolutely accelerates the issues we're seeing on the AR and collection side.
100%. Look, I've run W Holdings, which was Nature's Medicine. I ran Dalwhinnie. I've been a client of yours in the past. I've used the CannaBIZ Collects product to figure this type of stuff out. But in general, my experience is that most operators really don't know how to evaluate and extend credit. They get excited. A salesperson will get excited about a new customer placing a large order, not realizing it takes maybe 6 to 9 months to pay for that order. And in that 6 to 9 months, if you're paying 10% interest or more, some folks are charged 36 up to pretty high interest rates out there, your margins are gone. And so that $100,000 order that carries for 9 months would probably cost you somewhere between $7,500 and $12,000 in carried interest. And that carried interest eats into those margins. And what you thought you could afford now is less. And so the longer that goes, the harder it is for you to afford the things that are in your forecast, the things that you're dreaming about. And then you could get the challenge of, man, these guys are not paying me and I'm nervous. At what point should people be talking to you? And do you share my perspective on that?
1,000%. And I would say even more than just interest, it's the opportunity cost and the cost of collection, not just the cost of having someone help you collect, but the chance of collection decreases every single month that you can't collect, so much that most collection agencies, including ours, are forced to charge a higher fee to make it worth our while when a claim, let's say, hits a year old or older, because the chance of collection just drops every single month it's not collected. So there's a lot of factors that just create a much riskier playing field when you're not escalating quickly. And that's on the collection side with our team at CannaBIZ Collects. It's thankfully maturing since we started in 2017. In 2017, people didn't know what a collection agency was. I was on the phone every day having to explain what we do, how contingency fees work, etc. Now we're at a point where I think people understand through the trials and tribulations of this industry, and unfortunately the challenges that most people have had to face. Okay, we know what a collections agency does, but what does a proper AR escalation strategy look like? And our biggest clients, the more mature clients that we have when it comes to size and resources, they have very tight controls in place. We're talking credit process dialed in and an AR collection process where if an account hits 90 days old after a final demand, they're sending it directly to our agency. And we love, obviously, that paper because we know there's a chance to collect and we know that there's been contact at least within the last 90 days. But the bulk, I would say probably 80 or 90% of our clients that we work with don't have that. they're waiting 6 months to a year. The owners still think that they can handle it themselves. Out of principle, they want to fight for it on their own. And you have to scream at the rooftops to say, is this worth your time to be chasing somebody that hasn't responded to you in 6 months? Or go after good business, focus on good relationships, focus on growing your team. And that's why a collection agency exists, is because we only charge if we're successful. But there's that gap, and every market has a gap. The more mature the states, the more fires that these operators have been through, the more sophisticated they're becoming on this. The younger the markets, sadly, they're not learning from other states, and we're going through the same cycle every time. And we'll get, when a new state opens up, let's say Michigan or Massachusetts a few years ago, on the phone saying, hey, you got past due money, get it submitted so we can put you top of line to get paid. And they'll say, no, we'll handle it on our own. 6 months to a year later, they call us. The chance of collection is more difficult. And now, a few years now that they're operating, we're starting to see that maturity of, okay, we need to get these things escalated before these companies go out of business or the cost of collection goes to zero.
Yeah, let's clear up a myth. And I want to make this a little funny. Hopefully I do this the right way. But when you think about the MSOs, I get it. When you think about single state operators and smaller MSOs that have some financial constraint, it becomes a little harder. And you make it a little harder even more. It's a grassroots industry. Everybody knows everybody. Everyone's friends with everybody. And now I've been trying to call my friend, the guy who I played golf with, I had lunch with, invited over for Christmas, who hasn't paid me in 90 days. Please pay me. My sales guys are trying to pay. I'm losing maybe the front end sale of that anymore, or that front end sale. And I'm worried that if I call you, Brad, are you going to be calling these people 1, 2 in the morning? It's going to be like the credit card companies that are just going to hound them to pieces. And that reflects broadly, because one person gets hounded, everyone gets, aware that I'm being hounded by this guy. And rightfully, but it's not always perceived that way. How do you operate? What is the experience like? If I hire you, what can the borrower in this case, or the customer in this case, expect to experience?
It's an awesome question and a lot to unpack there, because there's a lot of ways I can go. To answer directly, we respond to the respect that we get back from the debtor. I would say in collections, you have two main components of basically if you can expect to get paid back. It's if the debtor has the means and if the debtor has the motive to pay. So it's usually one or the other. They either have the means to pay, but they don't have the motive, or they have the motive to pay. They're nice and they want to pay, but they don't have the means to pay. They don't have the money. And trying to isolate which one is that is really one of our core jobs on the collection floor. Is our team only works in cannabis. They know a lot of the players, and typically they'll know if this particular buyer has the means to pay, but just doesn't want to pay, or has the motive to pay. They really wish they can pay. They're looking for funding. They're going to try to pay, but they just can't. And when we deal with debtors, which typically we know from the 8 years of data we have on these companies, there are a small percentage, I would say very small, that don't have the motive. Let's call them the bad actors, right? Mm-hmm. And I think there's a lot of noise, especially on LinkedIn and trade shows that, it's the cannabis industry. There's a bunch of people out here that are just bullies and they don't, I do this every single day. And I don't think that's true. I think it's a squeaky wheel that makes the noise, right? Where you have a couple players that kind of make it look bad for everybody else. But the reality is most of these buyers, we're in a tough industry. We all know the issues that we're facing. And I think it's really important, is what I instilled in our team from the beginning. We need to work with the buyers and work out situations that just take a lot of time, payment plans, settlement agreements, negotiations, just constant follow-up, which sometimes is required. It doesn't mean we're going to be bullying and banging down doors to get paid, but sometimes that's necessary when you're dealing with a debtor that responds in a way that kind of requires a more aggressive tactic, including legal action, lawsuits. We have a full associate counsel network across the country. But the point being is it all depends on how we're being treated and how they're treating our client, because business is people. And we do our best to respond to those people the way that if they want to get out of a hole, we'll help them. If they don't, and they say bad words for the lack of other ways of saying it, then this is not something that we're going to deal with. And it shouldn't be something that our client has to deal with. But just to go back one step, you mentioned the reputation part of this, and sending someone to collections, it can be very scary about, what happens to our relationship with a customer that I work so hard to build. This is something I battled for the first 2 years of starting this agency. It was the hardest obstacle, is people saying, but I had the relationship, and I was there. I had all these relationships, and actually the group I worked for in Colorado, I sent a lot of those accounts to collections, and I ended up suing some of my previous clients. In this business right now, as we know, it's very tough. You have to separate, in this particular situation, business from personal. If you are not getting responses or communication or any kind of workout agreements from your clients. And I always say, send a final demand internally and say, you have until this time and date to pay, or else you're forcing us to escalate this matter to collections or legal. If you're not going to get a response after 90 days of constant following up internally, then to me, it's almost like a bad relationship. It is a bad relationship. It's if you were with a boyfriend or a girlfriend and they've cheated on you now for the second or third time, is this someone that you're going to want to continue to live with? Truly. And if someone says, yes, I need that customer, sadly, that's unfortunately a prediction factor of how long will this operator be in business if they're taking so much care of someone that's not taking care of them. And I think it's really important to understand the dynamics, because actually what I found is the clients we work with, more than 1,800 clients in the industry today, they're the ones that are the most respected because they care about their cash flow, because they have to pay their people and they have to build a business and they have to put good product on people's shelves. And if they're not going to get paid because someone is not willing to pay them or can't pay them, that does suck for them, but that's not your problem if you did what you were asked to do.
Yeah, I love what you said there. Business is people. And business is business, people are people, and business is the function of working through those relationships to garner mutual benefit across those relationships. And if it's not mutual, it's narcissistic, right? And so you need to move forward from there. One of the things we worked on as when I was the CEO of Debbie Holdings and Nature's Medicine was those turnaround type things. Let's talk to our vendors in advance right now. Tell them the cash situation we're in. Tell them when they can expect payment. Explain to them why they need your help. And I was there to help you when you were successful. Now we need you to help us through a period of time. Having those mature conversations so people know and understand the expectations is key, whether it's dealing with vendor payments. And if you're not getting payment from your customers, guess what? You're going to have to deal with those customers having to pay your vendors and your people. Even talking to your people about, well, I'm having a hard time making payroll this week. This is what we need to get done in order for me to make payroll, is a very transparent way of leadership that when you're going through transformation or struggle is more valued, and you'll get more cooperation from vendors and people when you're dealing with tough customer situations. But you also made a comment about fraud and the perception of fraud in the industry. And we're talking about the sales cycle. There's no bigger process of fraud than the sales cycle. People taking money out of the register, wholesale folks dealing with kickbacks and saying, if you give me the sale at this price, I'll kick you back some product, or I kick you back some money, or I promise to give you a job if you lose your job. I've seen numbers of different kind of fraud schemes over the year, but a lot of those do wind up in court and do wind up in legal situations, and not paying your bills in some state is a form of fraud. Tell me anything you can about how we can prevent fraud in the sales cycle.
Absolutely. And like you mentioned, transparency and expectations, it's everything. Not just in business, but just obviously in life. But the point is, like, as long as you're setting proper expectations, which I would say is credit process, then on the other side, there's consequences on both sides. And I can say that because just like you, Terry, I was literally in the same boat of I couldn't get all this cash collected when we told our sales reps to extend terms in Colorado. And I had labs, packaging vendors, everyone calling me saying, Brett, where's our money? And just like you, I had to say, I'm sitting here every day of my life calling these retailers to pay because I just can't afford right now to pay payroll and pay you, which is my fault. I think that's where the important part is taking accountability of I should never have let sales reps make blind credit decisions, because now I'm putting my vendors at jeopardy and my people at jeopardy. And I think that's something that I'll get to your question in a second, but I just want to stamp that because so many times I hear operators screaming at the hilltops to work. The states need to get involved and the states need to regulate this. And great, that would be awesome. Hypothetically speaking, if there was some help to help regulate the issues of credit collections with the state, awesome. We can't control that. So we can't just be screaming to have governance when things get bad. Because, for example, when I was in Colorado, the state came in and chopped down all of our plants because we couldn't show a specific paper of where the seeds came. We didn't want any interference with the state, but now when you have an issue, now you want the state to come in. So I'm saying this because it's important to take accountability the same way I did, which is why I'm dedicating my career to do this, of the mistakes that we made, and moving forward, how to prevent the fraud that could happen. Because if you know that this is happening to other players, if you know that there's insights of somebody that's robbing Peter to pay Paul, then maybe it's a responsible action not to give that customer credit terms. And it's fascinating, Terry, that we have this information now. We demo it every single day to operators across the country, show them the claims that they placed to our collection agency and how they would have known a year ago that same debtor was placed 3 years ago, and we knew that they had the red flags, and they still say, I'd rather just deal with the consequences than take predictive action. Yeah, I'd rather wait and see versus change. And change is always hard. And I'm not saying that we always change and my company changes as fast as we should. But when it comes to protecting against fraud, you need to know who you're doing business with. And to know who you're doing business with, you need access to information, or you need some sort of process at all before you just commit to doing business with. And we've seen it. There's been viral videos of a retailer in California. I'm sure most of you seen it. They're a notorious debtor in the space, that the CEO comes out and says on a surveillance camera, we're basically leveraging our vendor payments or our vendor bills in order to fund our business. How great is that? And laughing about it. It's on video. So if you know this is happening, how are we going to attack it? And how do we shed light to say there's nothing more important than protecting your cash flow? And to protect your cash flow, here are your options. Then at least have a credit and collection process or best practices before you complain about being owed a bunch of money.
So for a good period of time in my life, I was an auditor and a chief audit executive, and I got into this world of auditing pretty deep. And there's a concept called the fraud risk triangle. And what the triangle says is there are opportunities for fraud that you should identify and close down. There's rationalization, like, hey, if I take the money, I'll give it back, everybody be fine. Or, hey, the owner has enough money, he won't miss another $50 or $100 out of the till. So there's pressure, rationalization, and opportunity. Now, the last one there is pressure. It's the pressure that someone's under to do something, whether that is a health issue and I need money for my health issue, or it's something personal in some way, or just pressure of the business for someone to do something wrong. And that's where the challenges come, because in an industry that has wild ups and downs, while you're in the downs, you don't have and you're not prepared for the downs, right? You don't have that revolving credit facility. You're running out of cash. You're wondering where payroll is going to come from, or you're wondering if you're going to be paid. If from a salesperson perspective, that pressure then creates the opportunity. That pressure in the face of opportunity to steal or do something nefarious, and the rationalization that the owner doesn't need it, creates the environment that fraud can mature. And the statistics out there were just incredible. Something like 95% of people, if in the right environment, meaning pressure, rationalization, and opportunity all coming together the right way, will move forward and do the fraudulent activity. Only 5% of people in that situation would choose to resign. It was an incredible statistic. It's probably a 10-year-old statistic, but I remember it well. And I think in this industry, the more education we get around risk mitigation, risk management, identifying the risks in the business, whether it be in the sales cycle or the payroll cycle or the vendor payment cycle, whatever cycle you're talking about, every single aspect of your business going through a risk experience and saying, if this happens, what would I do? And how could this happen? And many times I talk to owners and they say, I know my team. These are the first people I ever hired. They're relatives of mine and they're friends and they're neighbors. And this guy was my college roommate. And then years later, you find out, well, that guy stepped on your trust. And now you're in a situation that you're suing your college roommate, your friend, your family member, etc., because it was a little bigger than they could handle. And it's a little bigger than you can handle. That's the challenge. One of the things that we're doing together, and we've partnered really to create a solution that allows operators to outsource this cash conversion cycle. Safe Harbor, along with CannaBIZ Collects and the association, can help you determine what the credit lines are, validate the credit risk assessments, make those collection calls for you, leverage how to handle collections in total, your vendor payment cycle as well, and minimize the areas where there could be fraud. The last company I consulted with, there was over $250,000 stolen just by a vendor misrepresenting themselves. And that's an incredible amount of money, 100% loss straight to the bottom line. So having tools in place to minimize that risk is paramount. And I just wanted to say thank you for partnering with us on that. I really hope that we push that well. And for those that need it, now the big MSOs, they got their team, like you said. But the folks that need it, reach out and see where we can do business together. Brett, anything else to share with our audience before we close?
Well, based off of what we're doing at the CCA, the Cannabis Credit Association, and to paint a picture on concluding with the fraud aspect, and we see so many things on Facebook and online of these blacklist groups, and that's the farthest thing that we're trying to do. And I want to be very clear that we're really Cannabis's credit bureau, and we're showing good payment behavior and poor payment behavior to give a full 360 look for all operators across the country, as well as ancillary providers, who they should do business with to prevent the fraud. Over 56% of all invoices we've seen from CCA are reported as past due. That's 56% of every invoice and trade line that's being put on terms is reported past due. And 23.2% are reported overdue over 91 days. That's 23% of every reported trade line we have is showing it's going to take at least 90 days to collect it. This information is gold if you're going to extend terms. If not, do COD. It's tough to do business COD, and I think credit is good. I think you guys know as a bank, credit is good. The whole world runs on credit if it's done right. So I just want to paint the picture of the $2.6 billion that our firm and agency has been accumulating over the last few years to provide a picture. This is to really show who you need to be doing business with. Even so much, we just launched a best payers index in each state where you can see who are the buyers that are actually paying their invoices on time and how fast are they paying.
Oh, I love that. So who's the best and who's the worst?
We flip the script here, and I think that's just so important because our whole entire vision and our whole mission here and partnering with Safe Harbor, because I've known you guys for years, it's how do we elevate this industry? How do we make sure we're putting a better playing field versus a blacklist of, which is not even compliant, but a blacklist of companies you shouldn't be doing with or just lobbying for the government to put all these controls in place? No. We need to create a safe space, call it a really nice basketball court with the right rules and the right teammates so we could just play ball and have a good time. And I think to wrap that all up, that's what I'm passionate about today. And it's great having amazing partners like yourselves to help promote and shed light on what we're doing. And we're really excited about the next couple of years because nobody comes close to having the amount of data, expertise, and team that we have to really help provide visibility in this space through the Cannabis Credit Association and CannaBIZ Collects.
I really appreciate that. What you're really talking about is a math equation on top of that. Operators are going to set their price. And generally speaking, it's a cost plus model. And it's what can a dispensary bear in terms of figuring out that price. But when that dispensary comes to you, or if you know in advance, it's going to take 90 days or more for you to get collection from that dispensary, you can really build in the cost of capital into that price. And if you're not building the cost of capital into price, then sometimes that's pretty high. It is a challenge for you to continually say that your business is worth something. The valuation of your business is based on your free cash flows. And if your free cash flows take a hit, when you go to exit, someone's going to look at this and say, hey, I know you say you have 35% margins or 50-something% margins, but you also have a cost of debt that's pretty high. And that part of that cost of debt is your extension of credit to people. And think about it also in terms of getting this right means when you exit, you make more money on that exit. Brett, really appreciate you joining us today. These are some of the topics that are so important to the cannabis industry operator, but don't get spoken to a lot. And I think part of that is not a lot of folks understand this well. Love the work that you're doing. I've been watching you for years. I can't believe you're doing it as young as you are, and I'm jealous. Glad to have you as a partner and as a friend. To our listeners, thank you for joining us on another episode of Banking on Cannabis. If you enjoyed today's discussion, please subscribe, leave a review, share the episodes with others, your friends in the industry. We like to have more conversations about the real challenges and the real solutions to our issues here in the cannabis industry. Thanks for listening, and we'll see you on the next episode of Banking on Cannabis.